Does your law firm sometimes need to reduce the amount that a client owes you? Well, in that case, you should watch this video, Giving Credits to Clients. If you have any questions about this topic, you can leave them in the comments section below and I'll do my best to help you. And of course, if you feel the video helped you, I hope you will click like and don't forget to subscribe to get updates on new videos that come out all the time. Sometimes you need to decrease the amount that you require a client to pay for a past service. It can be for many different reasons. The action of reducing a client's balance is documented in a credit memo. For example, February 20, we gave Candy Charles a $500 reduction of her balance for some reason. It could be any reason. We will make a credit memo to document this event. The specific service that we are retroactively decreasing the charge for was legal services rendered. So what will change in the trial balance when we make a credit memo for a customer? Well, income from legal services will decrease because if we're giving credit, it means we earned less of that income. And unearned legal fees will also decrease because if we earn less income, that means we owe less legal fees or less legal service in the future. So unearned legal fees will decrease, but be careful. It will become more negative as a result of making a credit memo. But will the customer's balance change? And the answer is yes. The open invoice report will show the whole picture of what's going on with the customer's balance. So, what will your trial balance look like after recording this credit memo? Well, we know that unearned legal fees will decrease and become $500 more negative, because it's not really supposed to be on the credit side. It's there because it's negative because we owe in the future. So if we give a credit to the client where we've earned less income, that means we owe less in future services, and that's why the negative number becomes more negative, $5,005. Don't worry about that. The legal service income goes down because we earned less income and it decreases by $500. So let's go ahead and record this credit memo. From the top left, click New and then go down to Credit Memo. Now, we know the customer that we're giving the credit to is Candy Charles. And we know that the day that we're giving the credit is February 20 of 2021. We click directly under the words Product and Service. Then we click the pull-down arrow, and we must choose the same item that was on the invoice that we charged the client. That has to be the same item that we put on a credit memo. And we put the amount of credit we're giving, $500. Now when we click Save and Close, we can click Reports, Trial Balance, and you can see the numbers are exactly as what we expected. Legal services income is $19,500, and unearned legal fees was decreased by the credit memo because it is an accounts receivable type of account, and accounts receivable goes down when you make the credit memo document, so it is more negative, and it is now $5,500. The most important report to consider is here, Reports, Open Invoice Report. Now, take a look at Candy's open invoice report. Invoice number 3 was originally $2,000, but you see it's only listing it as $1,500. And that's because QuickBooks Online automatically applies any credit or payment to any invoice that was already open. So this invoice was already open at the moment we recorded this credit memo, and it was $2,000, and QuickBooks Online automatically applied the $500 credit. Let's double click and open this invoice. You can see the original amount, actually the original amount was $13,000, and there was $11,500 received. $11,000 was received from a past payment, and $500 was received by way of a credit. Close this out, and I'll show you if we actually open the payment. We can click Reports, Transaction List by Customer. Now, if we go down to Candy, you see what happened here? This is a strange behavior of QuickBooks Online, because QuickBooks Online will automatically apply any credit to any open invoice, but it will do this. It will first record the credit memo. See? Here's the original invoice. This is a behavior that needs explaining. Here's the original invoice. Here's the payment that was applied to the invoice on this row. And here's the credit memo, and they're all in a list right now. But you see what QuickBooks Online is telling you in these two little transactions here is that QuickBooks Online recorded a transaction on the actual date that it happened. Not the date that I recorded not the date that the transaction happened, the date that it was recorded. The date that it was recorded, QuickBooks Online creates a payment transaction for the purposes of applying the credit to the invoice. You can double click and you can open up and you can see that this invoice number 1003 had $500 worth of credit applied. And if you look at the advanced videos for managing this complex window, receive payment, you will see that this is telling you this was the invoice and this was the credit memo, and the check marks were saying that we checked this credit memo to apply it to this invoice. So this is a $0 payment because QuickBooks Online has already applied the credit to the invoice, and that's the reason why the open invoice report shows only $1,500 remaining for invoice number 3 for Candy.